Welcome to PyUncut, where we break down complex financial news into simple, powerful insights you can actually use. Today's topic is one of the most exciting ideas in investing. What if just two stocks could define your financial future over the next decade? Not short-term trades, not hype cycles, but true long-term wealth creators. Because history tells us something very important. In the stock market, a small number of companies create the majority of wealth. In fact, research shows that just a tiny fraction of stocks are responsible for most long-term gains. So the real question is, how do you identify those monster stocks early? Let's break it down. First, what exactly is a monster stock? A monster stock is not just a company that grows fast for a year or two. It is a business that compounds value for decades. It dominates its industry, reinvests profits efficiently, and benefits from long-term global trends like artificial intelligence, healthcare demand, or energy transformation. Think about companies like Apple or Nvidia. They didn't just grow, they transformed entire industries. And now, analysts are pointing to two new potential monster stocks that could shape the next decade. Let's talk about the first one. The first monster stock is built around one of the biggest trends in the world today: artificial intelligence and cloud infrastructure. Right now, AI is not just a buzzword. It is becoming the backbone of modern economies. Companies are spending billions on data centers, chips, and cloud services. We are entering an era where computing power is the new oil. And here's the key insight. The companies that supply this infrastructure are not just benefiting from demand today. They are building platforms that could dominate for the next 10 to 15 years. We've already seen how this plays out. Nvidia became one of the most valuable companies in the world by powering AI workloads. The next wave of winners could come from companies that enable AI at scale, whether through cloud platforms, semiconductor innovation, or enterprise software. This is why capital expenditures across tech companies are hitting record highs. These businesses are reinvesting aggressively to capture future growth. For long-term investors, this matters a lot. Because when a company is investing heavily today, it is often building a moat for tomorrow. Now let's talk about the second monster stock. This one is tied to another massive global trend: energy demand. As AI grows, energy consumption is exploding. Data centers require enormous amounts of electricity. Electric vehicles, smart cities, and industrial automation are all increasing power demand. This creates a huge opportunity for energy companies that can scale efficiently. For example, some power companies have already delivered extraordinary returns. One such company saw its stock rise more than 500% in just 3 years, driven by rising electricity demand and infrastructure expansion. But here's the bigger picture. Energy is no longer just about oil and gas. It is about a mix of nuclear, solar, battery storage, and grid optimization. The companies that can provide reliable, scalable, and clean energy will become critical to the global economy. And just like AI infrastructure, this is not a short-term trend. It is a multi-decade transformation. Now let's step back and understand why these two themes are so powerful together. AI and energy are deeply connected. AI needs data centers. Data centers need electricity. Electricity demand drives investment in energy infrastructure. This creates a powerful feedback loop. As AI adoption increases, energy demand rises. As energy infrastructure improves, AI becomes more scalable. For investors, this means you are not just betting on one trend. You are betting on an entire ecosystem. And that is exactly what creates monster stocks. Now let's talk about the most important question. How do you identify these opportunities early? There are 3 key signals you should look for. First, massive and growing markets. Both AI and energy are trillion-dollar opportunities. These are not niche sectors. They are foundational to the global economy. Second, strong competitive advantages. Monster stocks usually have a moat. This could be technology, brand, scale, or network effects. For example, companies that dominate AI chips or cloud platforms are incredibly hard to replace. Third, consistent reinvestment. The best companies don't just make profits. They reinvest those profits into growth. This is what allowed companies like Monster Beverage to deliver extraordinary returns over decades, turning small investments into massive wealth. Now let's talk about risks. Because no investment is guaranteed. Markets are volatile. Even the best companies can face short-term declines. In fact, some analysts are warning about a potential lost decade for stocks if valuations remain high and economic conditions weaken. This is why long-term thinking is critical. Monster stocks don't grow in a straight line. They go through ups and downs. But over time, their fundamentals drive returns. So instead of focusing on daily price movements, investors should focus on business quality and long-term trends. Now let's bring everything together. We are entering a decade defined by two major forces: artificial intelligence, which is transforming how businesses operate, and energy transformation, which is powering that change. The companies at the center of these trends have the potential to become the next generation of market leaders. But here's the key takeaway. You don't need dozens of stocks to build wealth. Sometimes, just one or two great companies held for a long time can outperform everything else. That's the power of compounding. That's how wealth is built in the stock market. So as you think about your investment strategy, ask yourself this: are you chasing short-term trends, or are you positioning yourself for the next decade? Because the biggest gains don't come from reacting to the market. They come from understanding where the world is going and investing early. And that is exactly what Monster stocks represent. This is PyUncut, helping you see beyond the headlines and understand the bigger picture. If you found this valuable, stay tuned for more deep dives into the future of investing.